You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where the name says it all. We break down the week that was and indeed still is on the futures options side of the fence. What's lighting up this week? I guess we have to tune in to find out. Is it going to be dairy? Is it going to be metals? Is it going to be rates? Is it going to be energy equities? You never know. But you have to tune in each week. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-compelling network upon which so many of you are mainlining these days. If you like what you hear, TWIFO, the full network, our app, wherever you get our content, throw some stars our way. It does help new people continue to discover the content. As we all know, there are new people discovering these markets literally every day. They need a place to turn, so help them find a place to turn in these troubled times. And of course, if you want more content in your lives, and hey, who doesn't? Then head on over to theoptionsinsider.com/pro. The second you hit that join button there, you will be greeted with 200 plus hours of exclusive content. So strap in. You've got some content coming your way. In addition to new shows every week, had a great pro Q&A earlier this week. Options Oddity is coming up tomorrow. We're giving away our pro trading crate for the month of May soon. So stay tuned to see if you are a winner for that one. And of course, live access to this, everything else we do here on the old network, theoptionsinsider.com/pro is the place to go to learn more as we learn who's joining us today in the old CME Group hot seat. I saw Nat Gas was lighting it up, so I had a feeling we might be joined by this person. I'm pleased to welcome back Miss Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, welcome back to TWIFO. It has been too long.
Hi, Mark. Yes, it has. Thank you.
We put up the Nat Gas signal. I'm glad to see you responded. I'm not sure what that would be, what logo that would be in the air, but whatever it was, we put it up there, and we've got a fun one. As we keep on rolling, listeners, right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up to the light side and to the dark side over there at CME Group this week. Carley, it's been a while, but it hasn't been long enough that you forgot what to do now. Where should we begin our journey this week? To the light side or to the dark side?
Let's hit up the light side.
All right, let's do it. Let's get green, listeners. By the way, you can find this report for yourselves if you follow CME on Twitter, if you follow us on Twitter. We both tweeted out right before showtime. You will see a pretty strong bias to the green this week. If you look at the broad swath of all the products over there at CME, looks like it's roughly 75-25 green versus red out there. Of course, when we dial it down to the bigger movers and shakers, then it is looking a little closer, but still intriguing stuff here on the list this week. To the light side we go, listeners. Number 5. You know, it's an interesting week when the Ultra 30 are making it onto our list this week, up 2.85%. So kicking things off out in rates. Will we stay in rates? Let's find out. Number 4, nope. We're hopping out of rates, heading on over to metals. It's copper, number 4, up 3.12%. Staying in metals for number 3, silver up 4.06%. Number 2, leaping on over to ags. And then we're drilling down into the livestock because number 2, listeners, it's lean hogs up 5.76%. It was number 1 in the other direction last week, off 7.71%. So gaining back most of what it lost last week. Interesting couple of weeks for lean hogs. Maybe we'll be heading out there this week. And number 1 to the light side this week, kind of a bit of an asterisk here. It's the euro dollar. This one's been lighting up our tape a lot over the last few months, but we all know this is pretty much a dwindling product at this point, up 10.5%. So maybe we'll have to put an asterisk, a bit of a pin in this one. Maybe we can see if we can reconfigure this one to roll outside of euro dollars. Not a lot of folks slinging the old euro dollars anymore out there. So if we knock off euro dollars, that puts lean hogs at our number 1 at 5.75%. And then the new number 5 would actually be live cattle, up 2.31%. So a lot of livestock lighting it up out there this week. All right, to the dark side we go now, listeners. Kicking things off back in ags, KC wheat off 2.66%. It was number 3 in the same direction last week, off 4.67%. So a rough couple of weeks here for KC wheat. Number 4, back to energy. It's Brent off 3.06%. In fact, buckle in. The rest of the dark side is all energy, listeners. Number 3, it's WTI off 4.05%. Number 2, it's RBOB off 5.12%. Number 4 to the other direction last week, up 2.19%. So interesting couple of weeks for RBOB, but nothing can hold a candle to our old friend and frequent offender, Carley's favorite product. Yes, it is Nat Gas. Number 1 to the dark side this week, off 13.09%. It was number 2 in the same direction last week, off 6.5%. So definitely a rough couple of weeks for Nat Gas. And since Carley is joining us, we have put up the Nat Gas Bat-Signal. I think we're going to head out to energy first.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, everyone. Welcome to the topsy-turvy world of energy these days. You guys and gals know where to find these reports for yourselves. CMEgroup.com/TWIFO, TWIFO, the place to go to kick the tires and light the fires on these. Once you're in that report, listeners, go to the drop down, go to asset class, go down 3 slots to energy. Then you're going to go in product category, down 3 more to Nat Gas. And that's where we're going to start our journey this week. Nat Gas, once again, looking like it's going to threaten the 2 handle, a 217, as we're kicking off the show here, listeners. Off another 24 cents or nearly 10% just since Monday's session. Obviously, we expand that to the end of the show last week. It's off 13%. So once again, an intriguing week. Carley, Nat Gas, we always joke here on the show that it's one of our 3 frequent offenders with lumber and Bitcoin. The other 2 not represented this week. It's pretty much all about Nat Gas this week. But the perennial question we've been asking for a while, ever since we first really threatened this two-handle, is A, what the hell's going on in Nat Gas? And B, where are we heading next? A lot of people would have assumed, I think you and I talked the last time you were on, that maybe the logical case was to the upside. But then again, we saw a lot of options paper lining up on the 1.5, on the 1 3/4 put strikes. In fact, spoiler alert, I'm looking again right now, listeners, and there's a bunch of those lighting it up again this week. So it's a very perplexing situation out there in Nat Gas. Carley, help us. We put out the bat signal. What are we to make of the madness that is Nat Gas right now?
Well, there's not a whole lot of good news to talk about natural gas, except for we are approaching today's low, and maybe actually a couple pennies lower than today's low, marks the downtrend line if you're looking at the July contract, the front month, that started back in April of 2022. So this is a trend line that goes way, way, way back. And so far this year, I mean, we've tested it multiple times. This will be the fourth time. And I think it's probably going to hold. The big question to me is seasonally, this is kind of a weak time of year for natural gas because it's not hot enough to keep the air conditioning using up some supply, and obviously the winter's still quite a ways away. So seasonally, nat gas tends to struggle. I'm wondering if the seasonal move came a little early because I have a hard time seeing it really break down below that support level for too long. Now, natural gas is kind of a wild animal, so that doesn't mean we can't poke below and test $2 before it finally firms up, at least in the short run. The concerning part about natural gas is, though, we've had some pretty big rallies off of this trend line in the last handful of months, but those rallies have been short-lived, and once they roll over, they come down pretty hard. So if you do decide to play the upside here, be really careful and don't get complacent or greedy if it goes your way. Make sure you protect yourself and lock in some profits if you happen to get it.
Yeah, I thought when the last time we were talking about Nat Gas, we were hanging out around 2.5. I thought, okay, maybe the upside is starting to kick in. And no, the rug was pulled out from everybody over here because we're threatening the two-handle yet again. So you're right. All these upside moves that everyone was talking about. We've had Dan Graham's on here. We've been talking about Nat Gas. Everyone's been on here talking about Nat Gas lately. And everyone's kind of speculating that maybe there is some upside to be found. But whatever we've had out there has been short-lived. And then once again, we start circling the drain again, 217 right now. Listen, what are you guys feeling? What are you up to out there in Nat Gas right now? How are you positioning with all these recent moves? It's an intriguing market. Carley, I know when you come on the show, you're always armed with usually some fun upside to be found in Nat Gas. Maybe just some straight up verticals, maybe some ladders. What are you up to out there in DeCarley and Nat Gas right now with your clients?
So at these prices, I probably wouldn't get too aggressive with it. We're shopping around. We may do something a little more aggressive in the next couple of days, depending on what the price action looks like. For example, maybe look to buy a vertical spread and sell a put to pay for it. So we might be looking to do something like that down the road. But for today, I think it's probably the best move. If you need to be in, just do something super simple. Buy a cheap call option. I think September calls, you can buy like 350 calls for less than, I think around $500, somewhere in that ballpark. I mean, I'm not this isn't an official recommendation. This is just giving you an idea of what's out there. So if you do something like that, your risk is very low and it's limited, and you've got a lot of time and to see what happens. And then if we do go a little bit lower, you can get a little more aggressive with it.
So given everything we just talked about, how the recent upside has been a little bit short-lived, if you had that vertical finance buy a put, or maybe if you just went out and bought that call, would you be a little bit quicker on the trigger finger to get out of it as a result? Or would you maybe try to let it ride and hope maybe this move was the one?
I'd probably be quick on the trigger to take some money off the table, mostly because of seasonality. Like I mentioned, this isn't necessarily a strong time of year for nat gas. So if we do get a sharp rally, there's a good chance it has a hard time holding those gains. I believe I'm kind of going off memory, but I think the 350 call for September, that's roughly $500-$600 now. I think on the last rally, which started from a little higher than where we are now and rallied for 60-70 cents, depending on which month you're looking at. I think in that time frame, that option picked up somewhere around $1,000, so 3 times the purchase price. Now, your timing has to be good. Obviously, there's no guarantees that we're right and nat gas goes up. But just to give you an idea, those natural gas calls right now are really, really cheap. But if gas starts moving higher, they can pick up value very quickly because people, they still remember 2022, 2021 when natural gas just went ballistic on the upside. So call options get expensive really quickly in that market.
Step 3.5 is intriguing. Right. Who can forget? It doesn't seem like that long ago. We were talking about 9 to 10 calls, Carley. And here we are scraping the bottom, 1.5 puts again. Oh, how the worm has turned in nat gas. Would you say over there at DeCarley, is nat gas your number one product, the one your clients are most engaged in these days?
No, you know what? Our clients are pretty diverse. They hop around to whatever's moving. And so do we. We're just looking for opportunities everywhere. But yeah, energies is a place where a lot of people like to speculate because, let's face it, the risk and reward is quite large there. So you can lose a lot of money, but you can make a lot of money. And so for people that are looking for that excitement, that action, those are good markets for that.
Yes, it's hard. If you're looking for a little bit of action, you could do a lot worse than nat gas. It's literally on our movers and shakers almost every week. We have to go back a ways to find a week when nat gas wasn't lighting it up to the light side or to the dark side. This is a rare week where lumber and Bitcoin aren't playing ball either. So nat gas has the crown all to itself. It also has the crown in terms of volume, listeners. Nat gas lighting it up again this week. Usually around this time, we might expect 400, maybe on a busy week, 440, 450. Already past 500,000 contracts, listeners, in nat gas, and not showing any signs of slowing down. And like any good product these days, it's all tied up in the near dated contracts out there. You know, Carley, with everyone just fixated on 0 DTE, imagine if we had some 0-day contracts in nat gas. Imagine how popular that product would be, Carley.
You know, it's interesting that you pulled that up because the CME recently has listed weekly options for natural gas for the American style. And we've got some clients that are inquiring about it because it gives them the ability, it's not day of, but it gives them the ability to speculate on a handful of days as opposed to a whole month. And, they're a lot cheaper. And as we know, natural gas can have some really big 1 or 2 day moves. So, if you're looking for action, CME and natural gas always delivers.
Yeah, it moves so much. It's a product you want to have gamma in. Look at all the products. I mean, we're looking at it right now. 29% of this 500,000 contracts is going up in that front month contract. I guarantee you, if there was a whole slew of weeklies out here, that they would be lighting it up as well. And if we had, of course, the proverbial 0 day, those would probably be lighting it up as well. This is definitely a contract where you want to have some high gamma, some high bang for your buck contracts in your back pocket at the end of the day. So we're going to hang out in that front July contract, listeners. It has about 26 days to go. The vol out there, 67. So actually fairly modest for nat gas. It's been over triple digits in the past, not too long ago. So 67, almost 68, up about 3.25 points here on the week. Skew wise, let's see what we've got cooking out there. Interesting because last week we had a pretty pronounced bid to the puts, 4.3% bid. Looks like that actually kind of worked out because that bid is gone now. The puts are pretty much flat. And the calls were 1.3% cheap. Nobody wanted them. This week, they're about 0.4, so they're pretty much flat as well. So weirdly enough, Carley, we talked before about how the options don't really give us a good signal about where people think is happening. Maybe they're just burned out. The options traders are just burned out. They can't tell what the hell's going on. So they've just flattened out this skew entirely. There's no premium in any direction. So right now, the options are telling us it's a coin flip, Carley.
Yeah, it does make sense to me. And I think you're right. I think traders, especially in this market, have just been completely exhausted. I mean, remember on this show, we're talking about people buying $15, $20, $25.
Yeah, it seems like yesterday to me.
Yeah, wasn't that long ago.
If you had told me on that show about a year ago that I'd be talking about 1/2 puts less than a year later, I would have literally called you a crazy person. And yet here we are right now, listeners, because that's what's lighting it up this week. The most active contract in nat gas is a 1/2 put in pick your month. They're lighting it up all over the place. The most active contract this week was actually the 1/2 put out in October. That one did 23, almost 24 12,000 contracts. So that gets the crown this week. And again, remember, listeners, this is a shortened week as well. I forgot to mention at the top of the show, we were closed for the Memorial Day holiday on Monday. So we've already done more than a week's worth of paper in a shortened holiday week. So that tells you how active Nat Gas is this week, including today, the big day for these 1/2 puts in October. It's today, 12,000 contracts on the tape today, 8,000 on Monday, about 4,000 on Wednesday, opening all week long. So folks cannot get enough of these 1/2 puts this week. There are 26, almost 27,000 open on this strike right now. So just a ton of 1/2 puts in October. Also, right behind it, we have the 1/2 puts out there in August, doing 22,000 contracts. Again, shortened holiday week, listeners. 9,000 today, 9,600 on Wednesday, 3,600 on Tuesday, opening all week long as well. So folks just piling into the 1/2 puts. And then not to be forgotten, got the SEP 1/2 puts doing almost 12,000 contracts today, 5,300 yesterday, 2,500 on Tuesday. So actually slightly closing on Tuesday. So maybe some folks bailing on the 1/2 puts on Tuesday, then piling back in Wednesday and today. Either way, just a ton of paper on the 1/2 put strikes across the board. But we said the lion's share of the paper, 29%, is actually going up in the July contract. Let's see what's going up there. And the most active contract there, not the 1/2 puts, actually the 1 3/4 puts. 21, almost 22,000 of those going up this week. The big day is today again. Today's a very active day for Nat Gas puts. 16, almost 17,000 of these 1 3/4 puts going up today. 3,400 yesterday, 1,600 on Tuesday. Looks like slightly closing yesterday and opening the rest of the week. And then not to be forgotten, we also have the 2 puts going up 17,500 times, almost 10,000 today. 4,600 on Wednesday, 3,200 on Tuesday. So it's a put palooza out here, Carley. 1/2 puts across the board, 1 3/4 puts in July, 2 puts in July. I mean, you got to really drill down to find any calls on this list, unless you're really excited about 3,800 of the 4 calls going up in January, Carley. It's all puts all the time. I guess that's not surprising given the price action, but maybe a little eye-opening nonetheless, Carley.
Yeah, it feels a little extreme to me. I mean, the trend is your friend, and so I get why people are doing that. But again, it wasn't that long ago. People were buying only calls in natural gas. And so you have to be really careful getting lured into being on the same side as the masses, because if everybody's thinking the same thing, we usually see the opposite, come to light. So we'll see how it goes.
Looks like folks are listening to you live, though, because those SEP 3/2 starting to light it up here, Carley. 2,200 going up today and about nearly 3,000 on the week. So see, you put out the bat signal for the SEP 3/2 and the folks are answering, starting to pile in. Again, all that volume coming today. So maybe some folks taking a nibble out there. You like that, listeners? 3.5 level by September expiration. You're getting past most of the summer seasonality and they're maybe starting to kick into some of that fall, looking ahead to some of the maybe colder months and some of the higher levels. Maybe you get a nice little tailwind behind you there in September. You like that 3/2 level? You just like it maybe from a technical level. I don't know. I'm intrigued. Hit us up. Let us know out there. We can probably spend the rest of the show here on Nat Gas, Carley, but there is more lighting it up, including in the same complex. Let's pop out of Nat Gas and go up 2 slots in the energy product family, listeners, to WTI. It is number 3 on our movers and shakers this week to the dark side, off 4.05%. Once again, threatening kind of historic levels, threatening to break the 70 handle as we speak. 70.15 right now, off 2.5 points or about 3.5%. So I know we said it's all green on the movers and shakers, and in the equity world, a lot of green out there as well. But in the energy space, not so much, listeners. They are coming for it this week. And that's also translating into a heck of a lot of paper. Again, shortened holiday week, listeners. No paper on Monday, yet we're already closing in on 700,000 contracts in WTI right now. For frame of reference, WTI usually on a normal full week till today, somewhere around 400, 450, similar to Nat Gas. And yet we're already at almost 700,000 contracts. So WTI threatening the 70 handle. That is clearly driving a lot of paper out here this week. Carley, I know you're not busy fielding calls in Nat Gas. You're looking at a little bit of WTI. What's catching your eye out there as we are also threatening another psychologically important level out there?
We are. So one thing that I'd like to point out is if you've watched any business news television or read any forums on crude oil, you've probably run across the line that this May has been the worst month in crude oil in X number of years. And that may be true, but if you realistically speaking, we're really not going anywhere. We're kind of in a tight trading range, but the way they're getting that stat is it was exactly the first trading day of April that OPEC announced the production cuts and the market gapped higher. So we started off the month on a $5 gap higher, and then we just happened to end the month the very last day on a trade down to the low end of the trading range. So yeah, it's been a really terrible month, but the reality is it just so happens that those two particular days were extremes. And so it just landed perfectly to allow that stat to happen. So don't get swayed by that. But with that said, I actually do think crude is in the process of some sort of a bottoming price action thing, but bottoms are a process. They are not an event. And I think it's going to be really messy for the next week or so. We have an OPEC meeting this Sunday, so that's always interesting. Those are crapshoots. You just literally never know how it's going to react, or maybe it doesn't react at all. So you want to be really careful going into this weekend. I would not be shocked to see a retest of the low 60s just because that's how oil is. But I think the bulls probably have the upper hand here in the long run. So once we get through all this digestion and panic selling and margin call selling and things like that, I think we resolve it to the upside. That's my best guess.
I was looking here while you were talking, digging into just what the heck is going up out here. What is driving this tsunami of paper out here, listeners? And you're right. OPEC obviously driving a little action. The fact that we're threatening this psychologically important level also driving some paper because they are responding in droves right now. Carley, the hot trade, the hot contract this week out here in WTI are the July 75s. They've already traded 120,000 times this week, including 57,000 today, 50,000 yesterday, and 13,000 on Tuesday. Again, all opening all week long. So, Carley, folks piling into the July 75s 2 weeks. So that's post OPEC. So maybe a good time frame there. You like these? You like the July 75s? I'll have to dig in to see what they're doing. I'm assuming they're buying these, but they could be overwriting. Do you like it better as an overwrite or a buy here, Carley?
To be honest, I would assume they're buying, and I think they've got a pretty good idea going now. They looked a lot better yesterday. They've almost doubled in value just today because we've had a nice up move in oil. But low and limited risk. As of yesterday, those options settled at 34 cents or $340. So shoot, I don't think that's a bad. It's obviously a bit of a lottery ticket. It's a kind of almost like a binary. It either happens or it doesn't. But if it does happen, you never know. I've seen some really big OPEC days.
Yeah, it's totally a scratcher on WTI, but you're right. I don't hate it. It's a reasonable scratcher, all things considered out there. Really quickly, you just mentioned binaries before I dive into all the other action going on out here in WTI. We had a big show last week with Nick, the creator of Quick Strike, and we kind of spent the whole hour talking about the event contracts over there on CME, including there are some in energy. You got to look a little bit. They kind of bury the Nat Gas product, but it is there. Have you dipped your toes in any of the binaries at CME, maybe in the energy side?
We have honestly, we really haven't yet. It's a little more challenging to get those types of products on the front ends of platforms. So that's kind of been a holdup, and we just haven't had the interest in it yet. But I think we will as time goes on. Obviously, for those people that are looking for some entertainment, that's a good way to do it.
Yeah, I think OPEC would be a good time for the binaries. A lot of coin flips going on around OPEC time. Let's see what else is lighting it up out here. Listen, like I said, we're threatening the 70 handle right now. 57.6% of the paper this week coming in the July contract. No surprise, it's all those July 75s. Again, 120,000. It's a shortened holiday week, already 120,000. So someone has a huge axe to grind on these 75s right now. What is the vol out here, listeners, in the July contract? It's a 43, up 7, almost 8 handles. Probably a lot of that just due to the fact that they're just gobbling up every option in sight out here. Let's see. Skew-wise, last week the puts 5.5% bid. This week, 8.6% bid. So the puts continue to catch a bid out here, which is interesting. Again, I think a lot of that has to do with the fact that we're threatening that 70 handle. If we break through it, it'll be interesting to see what happens to those puts. But as we start to threaten it, you do see a little bit of a bid start creeping into the downside. That's to be expected. The calls last week, 3.4% cheap. This week, nearly 8% cheap. So that's kind of interesting given the fact that there is a tsunami of paper going up on the 75 strike, that call wing would continue to come in. Again, I'll have to dig into the blocks. Carley sounds like she's been watching some of the flow on these. I'll have to dig into the blocks to see exactly what prices these are going up and stuff, because I would always assume, like Carley did, that these are some scratchers for the next couple of weeks here on crude having a nice little pop. But intriguing stuff out there. Once we get past that, listeners, yes, there is paper outside of the 120,000 of the 75 calls in July. The next most active contract is actually the 60 puts. I would have guessed something around the 70 strike, but no, it's the 60 puts, listeners, doing 24, almost 25,000 contracts, also in July. Once again, the big day is today, 14,000 today, 6,000 on Wednesday, 4,300 on Tuesday. Looks like back and forth opening to closing throughout the week. And right behind it, we have the 65 puts, 21,000 of those this week. Again, kind of evenly trading throughout the week, 6,500 to 7,000 just about every day this week. Looks like mostly closing there. So some folks bailing on their 65 puts. And then behind that, we have 60 puts also trading out in October, doing 21,000 contracts there as well. The big day for those was Wednesday, 10,000 on Wednesday, 8,700 today, and about 2,600 on Tuesday. It looks like folks bailing on their 60 puts out there as well. So a lot of closing downside put paper out here this week, which is kind of interesting. Again, we have had a bit of a sell-off, so maybe some folks wanting to take it off, get while the getting is good, but intriguing stuff nonetheless. There is some other upside paper to be found, including the SEP 80s, 80s, going up 13, almost 14,000 times this week. The big day was today, 7,500, 5,700 on Wednesday, and a couple of hundred on Tuesday. So it's like mostly opening throughout the week, yesterday and today. Interesting. SEP 80s or the July 75s, listeners? Which ones do you like better? One has 77 days and one has 13 days. So one has very much more the with the air of the lottery ticket trade about it than the other, but intriguing stuff nonetheless. We could probably spend the rest of the show out here in energy, but we have to keep on rolling. So Carley, you're our guest. Well, I'll give you pride of place. Where should we head on our journey next?
Let's go to the meats.
Ooh, to the ags and to the livestock we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, let's pop on out of energy. Let's go right to the top of that product list, agriculture. Then we're going to go over to the product family. And normally we would hang out in grains and oilseeds for the ags, but no, we're going to slide down. We're going to go past corn. We're going to go past wheat, going to go past beans, all the way to the livestock category, listeners, because as I mentioned, lean hogs this week taking the number 2 spot, up 5.75%. And if we expanded our light side to a 6, if we kind of put that asterisk on Eurodollars, then number 5 would actually be the live cattle, up a little over 2% as well. So the livestock lighting it up out there this week. I'm curious, Carley, is this a hot product category over there at DeCarley? You get the phones burning it up for the livestock these days?
Recently, yes, absolutely. I mean, we do handle a lot of hedging business, so some of it's hedging, but meats have been moving this year. This has been their year. In hogs, it's been all to the downside, and cattle all to the upside, but the volatility is there.
Yeah, these are products that a lot of people have always just scratched their heads at, and they can't make heads or tails. I knew a lot of guys who, when the big diaspora came from the SIBO and people were looking for other places, a lot of them went into corn at CME, some other products. I know quite a few who tried their hands at the livestock, and they just abandoned. They said, I can't make heads or tails of this flow. I have no idea what's going up out here. It trades by appointment. I'm done. And, now fast forward a few years now, and that has very much changed. I'm looking at the volume numbers now, and we used to be excited when the lean hogs would do 20, maybe 30,000 contracts. That was a banger week. 68, actually 69, almost 70,000 contracts on the tape for lean hogs this week. So lean hogs lighting it up. For frame of reference, listener, that's going to be probably 2x silver, multiple times copper. I mean, that's a lot of paper for the livestock. So people, as you mentioned, Carley, are clearly discovering these product categories. So what are your clients, what are they up to out there in lean hogs right now? What's catching your eye out there?
Well, so what we've been doing is the hog market is absolutely, it's crazy. It's wild. It's a little thinner than some of the other commodities. So you get some silly volatility. So we tend to go way out into the back months where it's a little bit tamer. So we've been trading the December options. We put on some risk reversals. We've done it. We put out a recommendation a while ago and we've adjusted a few times. But the idea is, I'm not sure I would chase it now with that hogs have rebounded. But when they were a little cheaper, we were basically selling puts and buying calls. And using the December contracts, you could get way out of the money. So you didn't have to worry about, well, you always have to worry. I shouldn't say that. You have to be concerned about your downside risk, but you have plenty of buffers. So things can get pretty ugly before you get into a whole lot of trouble. So we were doing those sorts of things. I'm kind of wondering if, like last week, we saw a really wild washout in hogs and then they've reversed themselves. So that's why they are doing so well this week. It's not necessarily that we're going gangbusters to higher prices. It's just we're reversing a move that probably shouldn't have happened last week. And I wonder if we're going to get the same thing in cattle next week. Cattle's been parabolic the last day or two. And I'm feeling at some point that's going to run out of steam and we're going to see some mean reversion, a lot like what we saw in hogs, but in the other direction in cattle. So it's definitely not going to be boring.
No, not boring indeed when we got nearly 70,000 contracts on the tape. You might be wondering, where are lean hogs trading right now? Listeners, that front future 83 3/4. As Carley mentioned, kind of reversing some moves from last week. It's up about 7 2/3 this week, or a little over 10% just from Monday. If you go back to last week's show, it's up about 5 3/4%. So a lot of action out there, and about 32% of the paper this week also going up in that front June contract. Not getting a lot of weekly action in lean hogs, but if this volume continues, maybe they will start flirting with some more near-dated contracts out there. What is the vol in lean hogs? You might be wondering. Again, as Carley alluded to, we saw kind of maybe a bit of an aberrant move last week, a little bit of a rectifying move this week. So the vol coming back in aggressively. 12 points, came in 12 points this week. It's 19.5. That's quite a vol apocalypse out here in the lean hogs. Skew-wise, you can expect to see some interesting moves in the skew out here, listeners, and that's kind of what we saw last week. The puts nearly 12% bid, 11.7% rich. This week, 6.7% rich. So the puts coming in about 5 points. The calls last week, 9.4% cheap. This week, about 4.9% cheap. So the call is getting less cheap, and the puts getting a little bit less bid this week, which again, the vol is getting annihilated. So not surprising to see those wings coming back down to earth. In terms of action, I said we're hanging out in 83 3/4 in that front future. It's the 82 calls, listeners, that were leading the dance this week, doing about 2,500 contracts. Almost all of that was yesterday, 2,250 yesterday, all of that opening. So just an explosion of paper. It looks like it was actually an 82-85 vertical, maybe going up. The numbers kind of line up. We also have 1,700 of the 84s trading yesterday as well. So yesterday was just the day for upside in the hogs because it's all trading. So we have a total of 2,500 of the 82s, 2,400 of the 85s, and 2,000 of the 84s trading this week, as well as 1,500 of the 80s, and almost all of that trading on Wednesday, with the exception of the 80s. The 80s have traded pretty evenly throughout the week, but everything else, it was all Wednesday all the time. So a lot of near-dated upside call action here in the hogs this week. Kind of interesting. If we get beyond that, if we go down to August, we have the 88s trading 1,371 times. Almost all of that, 1,368 going up on Tuesday. Then a whopping 3 lot on Wednesday and a goose egg today. So all of that trading on Tuesday, all opening. So someone opening for size on the 88s in August this week as well. So interesting stuff. You mentioned the live cattle, not a product we get to feature too often here on the show, but like you mentioned, it would be in our restructured top 5. And from a volume perspective, actually beating out lean hogs, almost 110,000 contracts on the tape for live cattle. So my goodness, nearly 200,000 contracts in the livestock markets just in these two. Wow, that's an impressive amount of paper, listeners. It was not that long ago where these markets were kind of also rans, kind of traded by appointment, and they didn't really light the world on fire. And we are certainly seeing a change out there right now. Again, 110,000 contracts in the live cattle, 37% of that coming in the August contract that has 64 days to go. So we'll hang out there. What is the vol in live cattle? You might be asking. It's a 1330. By the way, we're hanging out at about a 172.42 in live cattle out there in that August expiration. The vol, again, 13 1/3, up 3 points. So again, given all this price action, you can maybe argue that vol was a little underpriced. That's why it's popping 3 points this week, or nearly 30%. I hate saying percent of a percent, but I think you get what I'm putting down there, listeners. In terms of skew, the puts last week, 8.4% bid. This week, almost 10% bid. So puts catching a bid. The calls last week, nobody cared. They were pretty much flat. This week, 5.3% cheap. So calls coming in. We are getting an aggressive move to the upside. So maybe some folks had some calls on and they're taking it off as we're getting this move materializing. So hence the skew maybe coming in a little bit. Let's see what the most active contract is out here in this over 100,000 contract week. It was the 163 puts out here in August, leading the dance with 4,500 contracts this week, 1,700 today, 1,200 on Tuesday, and 1,400 on Wednesday. Back and forth, opening to closing on these 163 puts. So kind of interesting. Right behind it, we have the 162 puts doing 4,300 contracts. And you might think the volume is similar. You might think it was vertical action, but no, the 162 puts, traded almost all that paper today. 3,500 today, 700 on Tuesday, and not much on Wednesday. So the 162 puts have been doing their own thing out here this week, which is kind of interesting. Right behind it, we have 4,200 of the 160s. Again, kind of trading all week long. 1,600 on Tuesday, 1,600 on Wednesday, about 1,000 today. Looks like mostly closing on the 160 puts out there. So intriguing action kind of across the board. Let's go out really quickly. We also have the Dees 180s going up 3,400 times this week as well. Almost all of that today, 3,200 of that today. And then 1,900 of the 184s going up this week as well, also in December. So just paper all over the place. Has this movement, this price action, this volatility, or this volume, this liquidity, listeners, has it caused you to maybe rethink the livestock markets in the past? I know they were pretty intimidating for a lot of people out there, but maybe there is some volume, there is some volatility out there. Maybe it's time to rethink the livestock. I don't know. Intriguing. Might be a good question of the week for us down the road as well. We're starting to come up against it here, Carley. We got time for one more product category. So where should we hang our hat next?
You want to stick with the ags and go to grains?
I think we can make that happen. If you want to go to the grains, we can do that. Listeners, pop out of the livestock. I know it's hard. I know you want to hang out in the sexy world of livestock these days, but we'll pop out of the livestock and go all the way up to the grains and oil seeds. This week, listeners, outside of the livestock, we did have movers and shakers out here in KC wheat coming in at 2.6%, number 5 to the dark side this week. We could certainly hang our hat out there in wheat as well. You know, if we're going to do wheat, listeners, we're probably going to hang out in Chicago wheat, SRW wheat. A little bit more paper on the tape out there. But to give you some frame of reference, we were just talking about the livestock, and both of those are pretty much matching or exceeding the volume in Chicago wheat right now. I said about 110,000 contracts on the tape for live cattle, and less than that in lean hogs, but still very active. 91,000 contracts on the tape right now in Chicago wheat. So live cattle trumping Chicago wheat this week, which is kind of interesting. Carley, what's catching your eye out there in the realm of wheat, or maybe some other grains and oil seeds this week?
Well, I have a lot of conversations with farmers and ranchers and people that are producers of commodities. And it's my take, and this is not a scientific poll or anything, but it's my take that a lot of farmers were insufficiently hedged into this big grain sell-off. And so I think it's just a matter of working out all the pain in the cash market. And quite frankly, I'm sure there's a lot of people that are experiencing some pain in the futures markets on the speculation side. Because wheat's trading at $6. It wasn't that long ago we were at $13 and the world was running out of food and everyone was going to starve. So, I mean, we start to get these really big extremes in sentiment. $13 in wheat was a super extreme, and I think $6 is pretty extreme as well. So I don't expect these prices to hold down here. I think $6 is a pretty good base for wheat going forward. But that said, sometimes fundamentals and charts don't guide prices. What guides prices in the short run is positioning, and people that are selling because they have to, not because they want to, have kind of been dominating some of the trades in grains. But it's really early in the year. A lot can go wrong in the growing cycle, particularly with corn and soybeans. And so there's lots of time for things to rebound. And I think that probably the long side of the market's going to be the most beneficial, at least for the coming, let's say, handful of weeks.
All right, let's check out what is going up out there, listeners. As you mentioned, in the 6 handle right now, 6.11 and a quarter to be precise, off another nearly 5 handles. 4 3/4 handles are about 0.75% this week. If you go back to the end of our show last week, off closing in on 3%. 91,000 contracts, like we said, less than the livestock this week, which again is fascinating to me. The lion's share of that paper, the ags tend to trade around certain harvesting cycles out there, and we see liquidity aggregate as a result, and that's what we're seeing again this week. The July contract, 73% of the paper. The only thing that's even remotely close to that are the equities, where it's all 0 day all the time now. But the ags, a close second, 73% in the July contract. That has about 22 days to go, so we'll hang our hat out there, listeners. A little bit of vol to be found in the ags these days, 37.5. That is the Chicago wheat July volatility. It's up 5.5 points this week. So if you're looking in other categories, let's say, I don't know, maybe S&P 500, you don't like a 15 handle in VIX, that's not enough for you. Allow me to present Chicago wheat, 37.5, listeners. That's some juice. In terms of skew last week, the put 7.1% cheap. This week, about 6% cheap. So coming in about a point there. The calls, 9.8% bid last week. So all the action, all the interest was in the calls. This week, that has come in a bit as well, about 5.3%. So getting cut pretty much in half in terms of the premium on the call wing. That's probably because the big dog out here this week were the 640s in July, going up 6,000 times, 4,000 of them on Tuesday, 4,000 of them on Wednesday, 1,600 on Tuesday. Not so much today, and most of that closing. So it seems like folks were bailing on these 640s in July this week, hence that skew coming in quite a bit. Right behind it, we have the 620s, 5,500 of those, 2,700 on Tuesday, 1,400 on Wednesday, and about 1,400 today. Those were mostly opening, so maybe some folks bailing on the farther out of the money strikes and rolling back down to some more, shall we say, relevant strikes. I mean, the volume doesn't really line up 1-to-1, but opening on one strike, net closing on the other, probably a little bit of that action going up out there as well. Not to be outdone, we also had some puts on the tape, but not a ton. 3,400 of the 550 puts in July, almost all of that on Wednesday, 3,000 on Wednesday, mostly opening, not much the rest of the week. 3,200 of the 575 puts also going up. That one a little bit more evenly spread out. 1,500 on Wednesday, slightly closing, 1,200 today, and about 400 on Monday. So interesting paper again, almost all of it centered around July out here. As we keep on rolling, let's see. We are kind of coming up against it here, listeners. So let's see if we can squeeze in a real quick futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to your feedback segment. I see you folks out there in the live chat. You are winning hearts and minds in our live chat here, Carley. We have Option God saying, Nat Gas is a mystery to me. Love listening to Carley talk about it, though. So there you go. You're turning him to the dark side. Options Queen says Carley does know a lot about Nat Gas. And Nichols says Carley is a great guest, so he's just a fan. So there you go. You're making some fans here.
Thank you.
In our live chat here. There's no accounting for taste in our live chat. I'm just kidding, of course. We also have one of our other pro listeners, Age of Delaquarius, chiming in via Twitter. He says he's responding to CME when they put out their tweet for the week saying what products are going to make it on the show this week. He responded to say, I'm slammed at work and I can't listen live, but you guys have to hit the energies. Yeah, we did. So hopefully you'll have a chance to hear it on the podcast side there, Age, because we did a deep dive into all things energy this week as well. I'm curious for you, Carley, because we didn't get a chance to hit the equities on the show this week. But as we all know, when you're talking equities, it's kind of like the ags. The ags are all around their crop rotation. The equities are all around 0 day. It's all anybody cares about out there. It's all that trades out there. So we put it out to our audience last week because it was pretty much a year ago, Carley. It seems like yesterday. Time has flown, but it was pretty much a year ago that this whole 0 day phenomenon really kicked off in earnest. SIBO listed them, CME also around the same time. So we thought it was a good time to poll our audience on this. We said, hey, looking back now with 1 year under our belts of 0 day trading, has the launch of these products changed the way you trade options? And almost from the get-go, the moment we posted this, it was a pretty contentious poll, and it went down to the wire. It ended up our audience slightly negative on 0 day contracts, 53.7% saying no, they don't trade them, and 46.3% saying yes, I'm all about the short term now. That kind of surprised me. I mean, we all see the numbers, Carley, so we all see people are trading these. Our audience, very bleeding edge, very option savvy. I kind of thought they might be all in on all things 0 day, but we also have a lot of professionals and industry people in our audience, and they're, I think, fair to put it, a little bit more reticent on these products. So maybe some of that spilling over in this poll. Either way, slightly negative on the 0 days. Does that surprise you, Carley?
Not really. I mean, the reality is the unemployment rate is like 5% sub. People have day jobs. So most people are doing other things than staring at screens like we do. But, I think as time goes on, my thing is with the short dated options and the 0 day options, I think they're really great hedges. So for those people that are day trading, for example, if you want to go long or short the S&P futures, having an option that expires that day as your insurance, basically like if you go short, buy a call option to hedge yourself instead of placing a stop order. We all know stop orders, if you place them too tight, you get stopped out. If you place them too deep, your risk is too big. But if you buy an option to protect your day trades, it's not perfect. There's some drawbacks, but it's a good way to have a little more lasting power and still make sure you don't get run over if something weird happens.
Yeah, that's a good point about the just high babysitting factor of these contracts. If you do have a day job, if you're not living on your screens, kind of hard to sling the 0 day unless you're really just doing some sort of set it and forget it type spread, and you hope it works out in your favor, in which case you're pretty much just trading a binary at that point. But yeah, I do get it. And we caution people, these are not products you really can turn away from. You got to kind of pay attention to these. So that could also be weighing on some people's votes out there. Speaking of our questions of the week, our poll this week, not exactly relevant for this audience, but an interesting one nonetheless. Right now, we're asking you, many of your favorite trading names are trading at or near 52-week lows in terms of volatility. So which of them would you rather buy 1 month volatility in right now, aka buy some front month options in right now? Gave you 4 choices: Apple, Microsoft, Tesla, or the index, the S&P 500 or SPY. Pick your poison. And right now, listeners, looks like you folks are leaning the Tesla route with about 38.1% saying Tesla. And then nearly 36% of you, 35.7% saying the S&P 500, 19% for Microsoft. No love for Apple, only 7.1%. So that's a little surprising for me. Do you agree with that, listeners? Would you be a buyer of 1 month S&P 500 volatility right now? If you agree, disagree, at Options is the place to go on Twitter to make your voice heard. Unfortunately, that music means we are out of time for TWIFO this week. Carley, I want to thank you for joining us this week. We put up the Nat Gas Bat-Signal, and I'm glad you answered, Carley.
Thank you, Mark. It was a pleasure to be here.
And before we go, if folks want to check out what you and the team at DeCarley are up to, sounds like you're up to a lot. Nat Gas, WTI, livestock, a lot going on in the world of DeCarley. If folks want to check it out for themselves, where should they go? What should they do?
Our website is DeCarleyTrading.com. That's spelled DECARLEY trading.com. And you can also find us on Twitter at Carley Garner.
I might see a new book in your future, Carley. Just call it Nat Gas and Livestock. What do you think? Fly off the shelves.
I'd definitely have plenty of content. That's for sure.
There you go. Everything old is new and hot again out there. Check them out over there. Of course, you can give her a follow on Twitter as well, at Carley Garner, CARLEY Garner, GARNER. All one word. A lot of great content coming out there in between appearances on this fine program. And of course, you know where to go to check out these reports and a whole bunch more. CMEgroup.com/TWIFO. That should be the starting point for your journey. From there, where you go, it's up to you. There's great research, there's great education, all kinds of stuff up there. You'll go down a rabbit hole, be warned, but it's a good rabbit hole to go down. Start at CMEgroup.com/TWIFO. That's going to do it for us on the network today. Back again tomorrow, noon Central, 1 p.m. Eastern, with good old Jam Croissant joining us on Volatility Views. After that, for all you pro folks, myself and the Rock Lobster holding court on all things unusual activity for Options Oddities. Then we're back again next week on Monday with the Option Block and the Crypto Rundown, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.